Good afternoon, everyone, and welcome to Wednesday, February 18th, 2026. Coming at you right here at 1 o'clock p.m. Eastern Time, an hour before the ho-hum Fed minutes, I believe, is due today. Let's get into it. I just did actually a bunch of portfolio moves literally just seconds ago on the breakouts. The portfolio turtle style is very heavy in energy now, as we'll get to oil here, a big breakout for oil. And what else we do? A big entry into Europe, actually pyramided in just a first level, first end size on Europe all-time highs. You'll see what I mean in the doc here. Hopefully everyone had a great, wonderful, lovely, long President's Day. And now let's get to trading here, okay? So today, oil, a big 4% pop. I guess the good news or the bad news is we might be going to war with Iran. The good news is the market's up. Consumer discretionary, a big jump higher here. These are the big standard deviation moves of the day. Oil, big 4% pop, and consumer discretion up. While real estate and utilities drop, real estate has been really the focus of the past 1 to 2 weeks. Really has gotten hot. We'll take a look at the charts. And utilities drop. I exited that. So the portfolio for the turtles as of right now is energy, Europe, and what was the other thing? There's so many moves, something I can't keep track. Solar, also bought solar, the TAN ETF today on a breakout. That's the portfolio. We exited, say it with me, utilities earlier today for basically flat. And also Japan for a small loss after the trend looks like it's at least taking a breather. New all-time highs today for Europe, a big Europe day. These are both similar, broad and core in terms of the constituents. EWQ is France, EWL is Switzerland. So they have gone across the pond and they are looking for opportunities in Europe. That is where, where you're missing out potentially on trends there. Europe is going higher and higher to new all-time highs as we speak. Let us, because it's been a couple of days since my Friday recap, let me go to the dashboard panel and we'll get a live look what's going on in the markets. If you have a ticker or something, you jot it in there and we'll possibly address it. Q's a big day up 1.3. We'll take a look at the SPY in a second. But NVIDIA, Q's up a big 1.3. NVIDIA up 2.33%, right back to that 190 mark, 189 to be exact. Tesla helping power that consumer discretionary push. Again, XLY is the basket, very heavily comprised of Tesla, Amazon, and Home Depot. I think it makes up roughly half. Tesla doing 1.4% addition here. Amazon up 2.5%. Micron, a huge 6% move. This stock is up 40% on the year. This thing moves, can't keep a good man down. Palantir, after being shellacked this year, down 23% this year, up 5% today. I saw that they're moving headquarters to Miami, and CARB saying occasionally we do kill people. So I guess there's no such thing as bad PR. Microsoft up 1%, a dog this year, an absolute dog. Small caps, a good day, up 1%, still looks strong. Silver, a big rip up higher here, up 7%. We were talking about before this up, going into Super Bowl weekend, everything like that. I think we will look at the chart. I'm not positive. Palo Alto reported earnings last night, a bad spot to be in, down 6%, and gold enjoying the metal rush, commodities rush today, really, minus the softs, up 2.5%. Let us get to the intraday tape as we're dealing with a little bit lesser volume than usual for SPY. As we said before, Fed minutes at 2, probably going to be the usual descent, will be data dependent, Don't really care. I look at charts. So we open here at the bell at 9:30 a.m. Right then and there, we took it above VWAP and really still trying to get our skis underneath us at 10 a.m. And now things look good as we're hitting into that resistance right around 688. I remember texting with a trader before. I'm saying we're going to be tethered to that 690 level. I'll do it when we get to SPY instead of the intraday. But I've said, we'll be tied to basically very close to 688, plus or minus 1%. I know yesterday we went a little bit low, and we'll look at that. But let's focus for right now. Intraday tape, VWAP, as I said, 687 even, and we're on the top part of that range. Let me zoom out here. So if you remember, I had said that February 18th would be the end on or around Feb 18th, which I checked is today, would be on or around the 18th would be the end of this bearish distribution phase, and they would start to start to begin accumulating SPY. That's what I had setting up for new all-time highs in early March. Again, these are not just straight up predictions. We deal, of course, in technical analysis probabilities. It's very akin to, playing blackjack. Do you hit a 16? There's a book way to do things. I'm just doing things in terms of probabilities. As I zoom out just really quick on this is a 1-year chart. Again, you're essentially range bound minus that breakdown the week before Thanksgiving. But, the chart still looks constructive. Rising 200-day moving average. Your 200-day moving average is at 650 even. You just crossed now to 50.5 RSI. Buyers are somewhat in control for the first time, I would argue, since February 11th, 7 days ago. It still looks a little bit jittery. I would say this needs a couple more days to base. Like I said, we're still going to be tethered to very close to 688. In terms of the bottom level, just because I am seeing some vol expansion, we had that hard, 675 floor here marked by my line here. And you see it's a picture perfect support each time. We got very close to it on February 5th. Bang, they bought it. Actually, at 676, they bought it. Again, 676, January 20th, they bought it, so on and so forth. December 17th was a little bit weaker at 671. Right now, just because the vol expansion, I'm really seeing some dispersion. I know it's like the word of the year, 6 weeks into the year here. But I'm seeing much dispersion underneath the hood within IWM, Qs, Dow, and SPY due to their exposure to software, due to their exposure to energy, due to something crazy like SPY. I'm sorry, the Dow, which is, price weighted. So Goldman has a massive, there's some firms in there that have much more weight than the others. So it's really a lot of dispersion, like I said, through the indices. We're going to focus on SPY. Give this some time to set up. I like the setup. Today is Wednesday. If you get a setup, in my opinion, under 688 in the coming days, I think you would take it. You might be a little bit early, but I am still seeing, the chart looks good, rising 200-day moving average. I just look at the charts in front of me here. The one thing I will say is that when you have this much coiled energy, like essentially you're range bound between 650 and 700 from September, that's a lot of energy. I know there's a lot of software that's overvalued software. We've been talking, the writing on the wall for companies like Fiverr. They reported earnings today. And again, guidance is atrocious going forward. So, it's like a kind of whatever that phrase is, the horse pulling the whatever it is. I'm tired. I only had half a cup of coffee today. But the point is, like, this has to make a move at some point. I know that's why some people are getting a little bit nervous that it will break down. Right here, what I'm seeing, like I said, let it, if you can get an entry under 688, I think it looks good. I am still targeting, to be frank, right around 705 for early to mid-March for all-time highs. So that is my levels. Let us get into really where the puck is going today and where they're obsessed with the market today. There are two big movers higher. I'm happy to be enjoying, very similar gains here. Oil is the belle of the ball today, up 4.5% now. When I did the writing of the article, it was up 4.1%. So just a quick 40 bips here. I'm glad I got into XLE, more into XLE, I should say. I'm pretty much, I think I'm full capped in terms of the pyramids. So I'm absolutely fully utilized. But here on the USO, a big day, up 4.5%. I'm looking at USO, like I said, it's up $79 here. Pretty messy W here. A lot doing in one day here. Again, don't forget USO oil peaked at the end of June, back at $83.50. We've been saying it's almost like, doesn't happen all the time. But when you see stocks hit all-time highs, typically the Qs follow, but it didn't happen this time. Qs all-time high was in October, the week of Halloween. What I'm saying for this is typically when you see XLE all-time highs, it's very, CHH, it's very closely similar with correlated with oil itself. You would expect to see this having new all-time highs or new 52-week highs. Hasn't happened here. For USO specifically, I like it right under, I would say under $76. This is a big move today. As I talk here at $79, VWAP on the day is 78. This looks like it wants to go to $81. I'm not so sure that the new 52-week high will be put in at 83.5, but I do think this has another $2 to go. Hence, so you can play XLE, play USO. And like I said, if you want to chase this right here, turtle style, my man Richard Dennis, the ATR is roughly 166. I'm seeing here quickly. So again, about if it moves against you, $3.10. It's a pretty wide stop. Get out because chances are likely go lower. It's not going in your direction. And it was a false breakout. But that's the way I would do it. Again, the ATR trading system, you're really supposed to do it against the high. So I would do it against, 80-30 technically, and then you implement that ATR stop. But right now, oil, bell of the ball, I think it's going higher. You could probably, it's going to cost you some, but you could probably do, the May 80 calls, May 81 calls and USO, maybe sell Feb or something 2 to 3 weeks out against it to help subsidize the trade, because this looks like it's going higher. Last thing on this, the 200-day moving average is starting to go higher. So I like that the support has consolidated and base right here around the 72.60 mark. And a level that it has not been since January 22nd, roughly 4 weeks ago. So this looks very constructive in U.S. oil. Folks are looking for trades. You can't just, the market right now is not just bidding Google up and making it, a $6 trillion company. That's not the tape right this second. What we've been in will highlight the best trades of the past 5 days and where the money is going. But right now, USO looks good. I stand by what I said for the options trades. The other trade today, up a multiple standard deviation mover, XLY. Very interesting. This was a short last week in the turtle portfolio. The one thing that bothers me about the turtles, but it works, so you got to trust it blindly. I'd rather follow the system than be wrong, in terms of a technical analysis take. The system is the system. I want to know that I'm observing and following the system correctly. That's what I care about. So XLY, one of the things I was going to say that bothers me is you short a 1 month low. To me as a technician, that's like shorting in the hole. You really do need a breakdown. And of course, you buy the highs. To me, I feel much more comfortable than that, given the backdrop of the overall market, folks looking for opportunity. But for this right here, I got out of XLY with a small loss, as is typical with the turtle system. You typically get out with very, very small losses. It's not much at all, a couple $100 at most. So this peak January 12th at XLY at 125, and this is what I'm talking about. Similar with what you're seeing with the mags. You're saying, oh, they got to stick in the 200-day moving average. They did. It got closer this time than the week before Thanksgiving. This actually dipped yesterday. XLY actually got below the 200-day moving average for the first time since May 9th, when we were trying to get out of that, Liberation Day and tariff fiasco and that huge drawdown we were seeing in April and into May. So it was definitely tested. Two mixed pictures here, okay? And this is similar with Qs and to an extent the S&P, but this is, like I said, Amazon, Tesla, so different pulls on it. This has not been above a 50 RSI since February 2nd. So I don't love seeing, essentially 2.5 weeks of let's sell the rips. But for me, speaking in terms of technically, this looks like it wants to get to 119. It's not a ton from where we are. It's about another $1.50 or 1.3%. But I think that's going to happen in the next 2 weeks, probably sooner. But for me, the overhead, I don't like seeing here at 122. I do not like seeing that here. Looks like a kind of a defense. I'm just don't love the resistance here at 123.5. So to be, cute, to get really on the button there, 122, I was rounding. So I don't like the resistance there. So if you enjoy the ride to 119, cool. But I don't think it erases 123. So could you do a 119, 123 March call spread? Yeah, absolutely. I think so. Run the risk on that and position size it properly. But that's a trade for XLY if you want to get long some Amazon, Tesla that way. All right. Let us see now the losers. There are some losers. And this was the bell of the ball last week. REITs, the Schwab US REIT ETF. There's a big land grab now. You don't want to be everyone's saying you got like 16 months to become a millionaire. AI is going to erase all of your potential. Cool. So there's a land grab, different things happening in terms of security, stocks get overvalued. Real estate, you can't just print more land. So here are REITs. Through the Schwab REIT ETF, a great performer in terms of, not losing your money, let's say. The 200-day moving average is at 2130. I always say the breakout above our former area plus overbought registration, you're off to the races. And that is what happened specifically at 2240. It happened February 11th, just 7 days ago, and boom, 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 boom. They took it to 52-week highs yesterday at 2307. A bit of a sell-off today. That's a multiple standard deviation mover here, down 1.5% for REITs. It is not overbought anymore. It is just squeaked beneath now a 60, we'll call it 68, 69 RSI. This has been up. That was a tie. That was a push. Speaking of blackjack, February 5th was a push, no gain, no loss. So this has not had a red day since February 2nd. and only one red day since January 29th. Trees don't grow to the sky, nor do REITs or houses. Although that Burj in Dubai is pretty big. Seems like it goes to the sky. This right here, great looking chart. I think it wants to take a breather to about 22 even, 2190. Totally healthy, totally normal. Similar to this crowding, or not crowding, but this starting to flock to different trades. You saw the 200 moving average start to curl up in oil. A little bit of, I'll put a little bit of money on this, kind of like playing the lucky ladies on the side for some upside. Again, another blackjack ref. This is what I'm seeing here in real estate as well. It's starting to get a little bit of a curl with the 200 moving average. Should this hold, $22, you're going to continue to see really a much more constructive chart. Again, new 52-week highs yesterday for REITs. They're taking profits today, down 1.5%. Looks like to me this wants to rest at around $21.90 to $22 over the next 2 weeks, and then you should take in a setup if possible. All right, the other thing they're hammering today, and I got out of this for a small loss, utilities. Kind of a nuanced thing. We were talking about Friday on our recap video, saying there's many worse places you could be in utilities. I think this thing is going higher for the next 2-ish weeks. We don't get them all right. That was on the breakout, and this is what I said bothers me. I love you, Richard and Dennis, but one of the things that bothers me with the breakout system is sometimes I know as a technician I am overpaying, but I want to see the lines continue to get longer, as it were, in terms of buying. It's almost like if you're a scalper, you buy a Taylor Swift ticket for $1,000, and you're saying, okay, I gotta be able to sell for $1,400, $1,600, something like that. It's not the you got to find a higher buyer, basically. Okay, so utilities, that didn't happen. They rejected it, and that was one of the points I made on the Friday video. I said, let's see where this closes. It actually closed that day down 0.25%, not a big deal, but VWAP that day was 46.56, and they closed it beneath that. So really, there's been a little bit of weakness from utilities since that piercing of the 52-week high. Doesn't seem they're ready. It's ready for 47 right now. Overall, great looking sector. There's diversification going on. You got to go into different plays. This is somewhat AI associated. I just think this has to take a little bit of a breather for the next 2 weeks. This doesn't look like a great setup for me right here. This looks like it wants to go to 44 even, which would be $1.83 reduction. So, 3-ish, 4% give back over the next 2-3 weeks, which kind of makes sense. If the S&P does set up and the bullish accumulation phase does start tweaking higher towards those early March all-time highs, then it makes sense that they would take their foot off the gas in utilities and real estate, as it's risk on, and those two are primarily risk off. All right, so that's utilities. You're not going to get paid. I was going to say you could probably sell the 47 calls, but you're not going to get paid. It's XLU. The ATR is very low on this puppy, 80 cents. So, and again, you can do the breakdowns too. But if it, the ATR on that's 55 cents. If it goes above on you, $1.10, 2 times 55, get out. But again, you don't want to do contrarian trades like that. This is a good looking chart with a higher 200 moving average. Just telling you today, it is breaking down a little bit. There's some give back. Top 3 gainers of the past 5 days. I'm hoping to include this one in the portfolio soon. South Korea, #1 gainer. Okay, this was is upsetting. I was working with Claude and doing the portfolio construction turtle style, and we ended up doing EWJ instead of EWY. And it's been frustrating. This thing is absolutely ridiculous. This has been above 57 RSI since Christmas Eve. So there is good luck finding someone to sell you EWY shares for cheaper, because they are bidding this thing higher and higher. Right now, it looks like it's still in go mode. If it does have a breakout at 134.32, it's very close. It could do it today. It's up 2.25%. It's the best performer the past 5 days, up 7.5%. Monster. I will try and make moves to get into the breakout just due to how hot this space is. Again, this is Samsung and Hynix. This is very heavy in the AI memory bandwidth world, as the founders are back over there in South Korea for this space. So personally, a much better setup, in my opinion, I would love to get in at 124. Love that if it's possible. And that basically goes to the area of the former breakout before it had this peak in overbought RSI. Well, crazy 84 RSI. Today, 71. Buyers absolutely in control of EWY. Should it go to 134.33, a penny tick above the new 52-week highs, I will happily get in and make portfolio moves turtle style to include such a winner. But South Korea, number one, I'm talking about it. I remember from my CMT presentation saying this is number 3 year over year after the craziness of silver and silver miners. And number 3, South Korea trading like a metal, a crowded trade. And here we are still number 1 on the week is South Korea. So Momo very strong in this one. Number 2, we haven't looked at this one in a while. It's the number 2 best chart, best ETF of the week is REMX, or the Rare Earth Strategic Metals ETF. A very strong 4% in the past 5 days, up 3% today alone is REMX or Remix. This one looks good. To be very honest with you, 21-day exponential is 88.42. I would love, view up on the day is 91.29. It is essentially not a high of the day right now. There is resistance here and a little bit of a gap to fill from January 29th. A little bit of overhead going into 93. It's going to be interesting. I think this looks good. I think this actually heads to 100 in the next 1 to 2 weeks. Let me see if there's turtles would dictate you have to buy a new high, which it is not at. If you are a different kind of a trader, I think this looks good. This looks like it's going higher. I really do think it's going to 100. That's crazy talk because it is $8 away, or almost 9-ish%. It looks strong though. My option mind, although again, the turtles only deal with stocks, ETFs in terms of the implementation I'm doing. But my option mind for this wants to buy the 100 calls, just straight up. I'll maybe take a look and put them in a side conquest, if you will, for the portfolio. But this looks strong. I love also, last thing on this, again, over 40 RSI, that's what you want to see out of a strong performer going back to 2 weeks before Thanksgiving. And I love this hold here of $82. Essentially, we've been above $82 for all of 2026. This looks at it. It was not ready for $102 back on January 26th. I think it may be upcoming. This looks strong. I will take a look at the option chain on this. There's always be careful with options and do it for size it for max loss. But streaming to me is it's going to be expensive, but like maybe a May, give yourself enough time. April or May, 100 calls looks really appetizing to me. And maybe you sell something 3 weeks out against it in REMX. Check the liquidity. Haven't looked at the option chain for this in a while, but is your number 2 performer in the past week, gaining strength here. So I like this one. This looks really strong. I'm going to put on my sheet here, REMX call spreads, April, May. 100 strike. All right. And then not going to kick a horse on this because we just did it, but the number 3, funny enough, best ETF is utilities, just a hair underneath the rare earth metals. So pretty diversified there, right? Number 1 leader this week for the past 5 days, South Korea. Number 2, rare earth metals. Number 3, utilities. Pretty good diversification there, okay? And utilities, the Utes, up 3.5% over the past 5 days. All right, so a lot of strength in those names. Where are the losers coming from? This is interesting, just considering we were just saying that the rare earth metals are very strong. Your number 1 loser, believe it or not, over the past 5 days is XME, the metals and mining ETF. Very liquid. Still very strong, though. Essentially, very similar internals in terms of since the week of Thanksgiving, holding 40 RSI, peaked, I think it's the same day. Yeah, Jan 26 at 136. I would think what I say for REMX goes for XME. This looks good. You actually kind of have like a discount. REMX is a different basket. That one looked good. Here, I love setups under 120. Do understand, though, the sellers, to me, 50 RSIs line in the sand. It's just nice and easy. I see which is stronger. That's it. It's almost looking like the relative strength or team point differential for a team. You just know who's been kicking butt all year, or a quarter, or half, whatever. And right here, I just see a 47 RSI, 3 away from 50. Yes, I understand. Don't love seeing the lower lows here. kind of a breakdown from that February 5th low, but they did hold in at 112 from yesterday. I like setups under 120. This is not a turtle, direction considering the no highs here, but this looks like it's actually headed to 135 in my opinion, which would be matching its 52-week high. That is crazy talk. So again, if you like REMX, not super liquid, but the stock is, folks love playing that one. Or you can do this one. Have your tight stop though on this. It's 185 for the ATR, so just about $4. If this drops to 113, I would get out. It's just not the season for it, if you will here. But this looks like it's getting ready to get going. I don't know if it's going to be the day. Also, just one last thing on this. Don't love that the view up on the day is 117.67 and it's below right here. I want to see that close above 117.67 going into the close to really confirm that strength. Don't forget, Fed minutes in 30 minutes could change markets a little bit. But this looks strong, so I'll also check XME. Understand that this is more on sale. There's definitely more of a bid for REMX. Trades that would stand out, besides, just doing the stock outright. You could similar. You could buy the 130 calls if that's listed for April or May, and you could sell, like the 125s against it expiring, say, 3 weeks out. That would be an idea. So that's my say for. But both spaces look good. I think these are going to highs in the next 2 weeks, or very close to it. And again, XME. One of the reasons why we're talking about it right here, part of this segment, it's the top loser of the past 5 days, down 4% or just under 1% a day. Look at this, going the other way, abundantly, up 2%. So I think that was, again, I'm a big guy on 15-day cycles. January 26th would take you around, February 11th low. February 17th just took a little bit longer. And in fact, February 11th, the day after that was that breakdown. So it kept you on your toes. Market has a way of making fools of us all. But this looks good. I gave you my option trade suggestion for that. Next one, I came very close to selling a la the turtle system, natural gas. It is like 40 degrees outside, although we are getting 4 inches of snow on Sunday. But natural gas is a candidate. I was coming very close to doing it, but instead I used my margin and capital on buying Europa and more XLE. But this looks weak. In terms of, again, it's down 1% today. It is down 4% over the past 5 days. So almost 1% a day. Basically, it's in line today. Just looks weak. It's technically above VWAP on the day. I think this base is right around this $11, right around here. Where we are. I don't think it goes much lower. Maybe like 11.15. It's hard to do on such a small dollar stock here. $11 stock, but I do think this base is this week around 11 handle. It should have, and then I do think a 2-week dead cat bounce should follow to just about, honestly, the vols to me getting kind of sidestepped and evaporated in UNG. It's kind of becoming a boring ETF. I don't even know if I'm going to start covering it anymore. But I think your dead cat bounce, and this gets it to about 1285. If they really take it up, and I doubt it because the weather is becoming warmer here as we are just less than 2 weeks away from March, it'll make a run towards 13.99. But I don't buy that. So that's as good as it got in December 5th for you nat gas holders. And then they gave you a week of an oopsie here when it had that false breakout, when it was 5 below in the East Coast basically for 2 weeks straight. So that makes sense. And again, technical analysis, it's coming off 52-week all-time low right there. So the rubber band got way stretched. And this is David hitting Goliath with the slingshot idea. And that's how you get from $10 to almost nearly $17 in 15 days. That's just kooky. That is natural gas. If you want to short it, be my guest. Richard Dennis actually did suggest that, but do understand ATR is 51 cents. So if this goes above where you're at right now, 11.74, buy $1.02, get out because it's not going to go your way. So XME, biggest loser past 5 days, a tie with UNG and actually with silver. So they are deleveraging. They are getting out of these trades. All different. Metals and mining, a winner. Nat gas, a reversal tactical play for short-term, supply data. Silver, a winner. I had a trader ask me today, which is better right here, right now, silver or gold. To me, gold has the smoother curve. It'll make you lose less hair and keep you up less nights. Silver may very well have more year-to-date gains, when we're talking here New Year's Eve and my annual wrap-up show. But silver is just more spec. If I'm, making a portfolio, a longer-term one, I really want an anchor, I'm going to put GLD in it over silver. But why are we talking about silver right now? It is one of your losers, the third worst loser after XME, metals and mining. This is a metal. And natural gas. And here is silver. All of them basically down 4%. Almost feels like a program sell. So they just said, let's take that. Let's take them all away. It reminds me of the Ed Harris thing. Okay, now rug pull and do this. But that's what makes me feel here. Again, they absolutely exited stage right. This is what I was alluding to with that trader. So all-time high, January 29th, or 52-week high, whatever, for silver here at 110, let's call it. This is similar to Bitcoin. This is exactly a very similar chart to Bitcoin. If you go back to October, I'm not going to waste time and do an overlay. But the reason why I'm doing that is because the internals. So we had the day of the high on silver, an 83 RSI, spectacular. Everyone was saying, whoa, this is insane. The next day, it's almost honestly like that Weird Al article I wrote when they say, oh, Al's not coming out anymore. He's not signing posters. Everyone leaves the line. What happened here was the next day, almost was like people saying, nah, I'm not interested in silver anymore. I'm good. 51 RSI has been the high, but still enduring strength deep down with a prevailing strong underneath bid. 40 RSI is the low, rising 200-day moving average. So it's not in trouble or anything like that. And to be frank, I like setups under 76. I think you'll be rewarded. It's messy. This chart should tell you right there it's messy. I love the hold of $65, though. And it's been above $65 since all of January 2026. So I think you'll be fine. I don't love the rejection of 51 RSI each time. That's a level, an internal level that's been held basically since, I mean, like since last May. I mean, it doesn't give it away. So I want to see if this is a new paradigm shift, a new valuation on silver, because they have really, truly exited. And sometimes the constructive, consolidations and getting the strength back takes a little bit more time. And then as soon as it gets back to that 50 to 55 RSI tops, they sell, kind of what we're seeing in Bitcoin to relate it to silver. And of course, there's leverage here. People borrow yen. They could buy more metals. They do Bitcoin back when it was the flavor of the week, which it's now not. But in terms of the stochastic momentum mix, yeah, it really did hang in where it had to. I don't like seeing that the lowest it's been all year. Lets me know is some momentum loss. Final word on this. The ATR is around 52 cents. You can get in right here. If it moves against you 104, get out. So right here, if it goes to 69, basically 68, 95, if I have my math correctly, right around there, get out. Otherwise, I do think this seems crazy. It's got to first close and be at 76 for a while. That will confirm my feelings, my thesis. We don't trade feelings. No. That will confirm my feelings that guess what? That was just a deleveraging, a forgiveness period, an ugly 3 weeks for silver. But it is back going higher. And the reason why that 75, 76 level is very important is it's the 20-day moving average, as well as, the 50 days lower. That's a 71. I want to see it clear that as well. So still, it's kind of like innocent or guilty till proven innocent, in my opinion, on silver. But it is getting hammered in the past week, down 4%. It's made all that back and then some in today's session alone with this commodities boom today with oil, silver, and gold. But silver down 4%, and I already told you what to do. My target, should it hold those levels, it's got to hold 76. It could do it, in a couple of days. This looks like it's headed to about, I would say like 104. It sounds crazy. It's got to hold those levels. And then I do think it's headed to 104, in 2 to 3 weeks. And it'll probably shock people. Not really sure why, since it is essentially number one year-over-year returner. The turtle system, unfortunately, I have to buy a 1 month high is what the rule is. So I would only be buying, it sounds crazy for some people, I would only be buying once it gets to 110. So I'd be right essentially from here saying, oh, it's going to go towards 106. And then once it gets literally to 110, I put in the order and I buy that breakout. Sounds counterintuitive, I know, but turtles over hares this year. But be warned, it just, it does look a little bit weak. It has to garner some strength. I'd rather buy this into true strength instead of waning momentum. Okay, how long do we do here? 34 minutes? All right, top 3 trades of the past 5 days. If you've been long South Korea, short XME, Short nat gas, congratulations. You're absolutely slaying this market. The turtles for me right here, I had some give back in the past week, not significant though. And I think it's directly correlated because I have not been in those trends. I've not been long EWI. I was long a laggard EWJ, which dragged. I'm not short XME right now, and I'm not short nat gas, although it came close. That is all. Today's Wednesday. We will be back on Friday with a recap vid, y'all. Let's go energy. Peace.